Welcome back to the Deep Dive. You know, we love to take a close look at what's happening in the market. And today, well, we're asking the question, is a certain stock a good buy right now?
A question that's on a lot of minds, I'd say, especially with all the craziness we've seen in the markets lately.
Yeah, exactly.
Yeah.
So much going on. And that's why we're here to do a deep dive into it, right? So let's zoom in a little. The stock we're looking at is Nvidia.
Nvidia. Uh-huh.
Now, you might know them best for their graphics cards.
Right, the ones that power all those high-end gaming PCs and, like, graphic design workstations.
Exactly. But Nvidia is also like a huge player in the world of AI, artificial intelligence.
Yeah, their chips are basically everywhere you look these days. Self-driving cars, AI chatbots, you name it.
And that's kind of what makes this whole thing so interesting, right?
Yeah, for sure.
Nvidia's stock, it's kind of like a canary in the coal mine for the entire AI industry.
I like that analogy.
When their stock dips, people start to worry. Like,
Yeah.
Is this a sign that the whole AI bubble is about to burst?
A lot of folks are definitely paying attention.
And speaking of dips, Nvidia's stock is currently about 27% off from its high back in January.
Yeah, that's a significant drop.
It has some people hitting the panic button, but there's this article from the Motley Fool that makes a really interesting argument.
Okay, I'm listening.
They think this could actually be a prime buying opportunity.
Really? A buying opportunity?
That's what they're saying. Their argument kind of hinges on a few key things. The first is to look at the broader market context.
Okay, makes sense. You gotta see the bigger picture.
The tech-heavy Nasdaq Composite is down, from its all-time high.
Which means that a lot of tech stocks are getting pulled down with it, even if they're doing well on their own.
So is Nvidia just getting swept up in this, general tech downturn?
That's the question, isn't it? Or is there something more specific going on?
Well, there are definitely a few things that have made investors a little skittish. One of the biggest is the U.S. government's export restrictions on AI chips to China.
Yeah, that's been a hot topic lately.
So just to be clear, these restrictions mean that U.S. companies like Nvidia can't just easily sell their most advanced AI chips to certain Chinese companies.
Which obviously has a big impact on NVIDIA's potential revenue.
Right. But why now? Why are these restrictions causing so much anxiety all of a sudden?
Well, there were these rumors floating around about some Chinese buyers maybe finding ways to get around the existing restrictions.
Oh, so like loopholes.
Yeah, exactly. And that kind of sparked this fear that the U.S. government might clamp down even harder.
Like even stricter regulations.
Exactly. And then Wall Street Journal ran an article about it, which really got everyone riled up.
And investors hate uncertainty.
Yeah, especially in a market as volatile as this. It's like they're saying, well, we don't know what's coming next, so let's just play it safe for now.
And this isn't even the only trade tension that's kind of messing with the market, right?
Oh, definitely not. Remember that whole back and forth with the tariffs that the Trump administration had going on with Canada and China?
Oh, yeah, and that was a whole thing.
It was wild. There were those few days in March, I think it was March 3rd, when Trump announced these new tariffs. And then the very next day, they went into effect.
Wow, so fast.
And then Canada and China retaliated almost immediately.
So a trade war, basically.
Pretty much. And then a couple days later on March 6th, the U.S. starts granting exemptions.
It was such a roller coaster. Up and down, up and down.
It was insane. All that unpredictability makes it super hard for companies like Nvidia to plan for the future.
Yeah, how can you make a business plan when the rules are constantly changing?
It's just adding fuel to the fire of market anxiety.
Makes sense. And then on top of all of that, you have this whole DeepSeek situation.
DeepSeek. This is where things get even more interesting.
So this DeepSeek, it's a Chinese startup, and they've made some pretty bold claims.
Okay, I'm intrigued. What are they claiming?
They say they've developed this powerful AI model that's way cheaper than what U.S. companies are spending.
Okay, so cheaper AI. That could be a game changer if it's true.
Right, and that's the big question. How are they doing it? And what does it mean for a company like Nvidia that's built its reputation on high-end, expensive technology?
Yeah, that's a million-dollar question. And it's why investors are paying such close attention.
So could you unpack their claims a little bit? Like, how do they say they're achieving these lower costs, and what could that mean for Nvidia?
Sure. So DeepSeek is claiming that they have a completely new approach to developing AI models, one that doesn't need the massive amounts of data and processing power that usually make AI so expensive.
So they're saying they could get the same or even better performance, but for a fraction of the cost.
Exactly. And that has some people wondering if NVIDIA's days at the top are numbered.
But if Nvidia's tech is considered so essential, couldn't they just pass the cost of the tariffs on to their customers?
In theory, maybe, but it's not that simple. If NVIDIA jacks up their prices too much, their customers might start looking elsewhere.
Especially if DeepSeek can really deliver on their promise of cheaper AI.
Right. It's a tough balancing act for Nvidia.
Okay, so let's recap. We have export restrictions, creating all this uncertainty, a trade war with unpredictable tariffs, and this new competitor making waves with claims of cheaper, potentially better technology. No wonder investors are getting spooked.
It's a lot to process.
But the Motley Fool still thinks this dip is a buying opportunity. Why? What are they seeing that everyone else is missing?
That's the big question, and that's what we'll dive into next.
Okay, so let's get into it. Why is the Motley Fool so bullish on Nvidia, even with all this stuff going on?
Well, one of their big points is that the market might be overreacting to this whole DeepSeek thing.
So they're saying it's not as big of a deal as everyone thinks.
Pretty much. Their claims are definitely interesting, but there's a lot of skepticism out there. Like, a lot of people in the tech world are like, yeah, we'll believe it when we see it.
Because DeepSeek hasn't really shown their cards yet, right?
Exactly. They've made these big promises about performance and cost, but they haven't released a lot of hard evidence to back it up.
That's fair. But even if DeepSeek isn't quite there yet, doesn't the fact that they exist at all signal that things are changing in the AI world?
It's definitely something to watch, for sure. Like, could this be the start of a trend toward more affordable AI?
Maybe. Like maybe NVIDIA's dominance is starting to slip.
It's possible. But even if DeepSeek's claims are totally legit, it's not like NVIDIA is going to disappear overnight.
It takes time to build trust and get people to adopt new technology.
Especially when you're going up against a giant like NVIDIA.
Right, they've been in the game for a while.
And all the big companies that are pouring billions into AI research, they're still relying heavily on NVIDIA's hardware.
So for now, it seems like NVIDIA is still in a pretty strong position.
I'd say so.
But what about those tariffs? Even if their tech is in such high demand, surely those extra costs have to hurt their bottom line.
Yeah, the tariffs are a bit of a wild card. It's hard to say exactly how it'll play out.
But the Motley Fool seems to think that it won't be a huge problem.
Yeah, their argument is basically that NVIDIA's technology is so crucial for so many companies that those companies will just eat the cost.
Rather than switching to a different supplier.
Exactly. They might have to raise prices a little bit, but it's not like their big customers are just going to stop buying.
Because they need those chips.
Right. Think about it. If a company is relying on NVIDIA's chips to power their self-driving car project or their next-gen AI medical diagnostics,
they're not going to ditch NVIDIA just to save a few bucks.
not when it could mean falling behind in the AI race.
Makes sense. But what about those export restrictions to China? That has to be a worry, right?
Of course, losing access to the Chinese market would be a blow to NVIDIA. But even in a worst-case scenario, like even if the U.S. totally bans all AI chip exports to China...
It wouldn't be the end of NVIDIA.
Right. Remember, China only made up about 13% of NVIDIA's total revenue last year?
So not insignificant, but not a make-or-break situation.
Exactly. They have customers all over the world. They're not solely reliant on China.
Okay, so even with the export restrictions, NVIDIA could probably weather the storm.
That's the Motley Fool's take.
I'm starting to see why they're so optimistic. But even if the fears about DeepSeek and tariffs and export restrictions are overblown, we still have to look at whether NVIDIA's stock is actually a good deal at its current price.
Absolutely. That's the key question. Is it actually undervalued?
So let's talk about NVIDIA's valuation. And there's this important metric that helps us understand that the forward price-to-earnings ratio, or PE ratio for short.
Right. NVIDIA's current forward PE ratio is sitting at 24.2.
Now, I know that PE ratios can sound kind of intimidating, but it's actually a pretty simple concept.
It's all about how much you're paying for a company's future earnings.
Imagine you're thinking about buying a bakery, right? The PE ratio is kind of like comparing the price tag of the bakery to how much profit you expect it to make in the coming years.
So a high PE ratio might mean that you're paying a premium for that bakery.
And a low PE ratio could mean you're getting a bargain.
Exactly. And the forward part just means that we're looking at projected earnings, not past performance.
We're looking into the future, trying to predict how much money the bakery will make.
It's like a crystal ball for investors.
But with NVIDIA, there's this interesting historical pattern we need to consider.
Oh, what's that?
Wall Street analysts have consistently underestimated NVIDIA's earnings growth. Like in 2023, analysts predicted that NVIDIA's earnings would grow by 15%.
Okay, and what happened?
They actually ended up growing by 28%.
Wow, so they blew past expectations.
And it's not just a one-time thing. This has happened multiple times.
So the analysts are constantly underestimating NVIDIA.
It seems that way.
Which means that their forward PE ratio might not be telling the whole story.
Exactly. The stock could be way more undervalued than it looks.
That's a good point.
And the Motley Fool really emphasizes this. They argue that if you just look at the current forward PE ratio, you're missing out on Nvidia's true potential.
Because the analysts are being too conservative.
Right. And even with those conservative estimates, Nvidia is still projected to have an average annual earnings growth of 32.8% over the next 5 years.
That's huge, especially for a company that's already so big.
So if you factor in that historical trend of analysts underestimating Nvidia's performance, the picture starts to look really bright.
Look, this could be a huge opportunity for investors.
Okay, I'm starting to get it. It sounds like the fears about export restrictions and tariffs and competition might be a bit overblown, and Nvidia's valuation might be even better than it seems at first glance.
That's the argument the Motley Fool is making.
But as with any investment, there are always risks.
Oh, absolutely. No investment is a sure thing.
The world is constantly changing, and nobody can predict the future with 100% certainty.
So it's important to do your own research and make sure you understand the risks involved.
Exactly. This deep dive is just a starting point. It's not financial advice.
We're just trying to give you the information and insights you need to make your own informed decisions.
Speaking of information, there's one more piece of the puzzle we need to talk about. Nvidia is famous for their graphics cards, for gaming and design.
Right, the ones that everyone wants but can never get their hands on.
Exactly. But how are their AI chips different?
Good question. It's not quite as simple as you might think.
Yeah, I think a lot of people, myself included, might assume that AI chips are just like supercharged versions of those graphics cards.
Yeah, that's a common misconception, but it's a bit more nuanced than that.
So what makes them different? What sets AI chips apart?
Well, it all comes down to what these chips are designed to do. You see, traditional CPUs, central processing units, those are kind of like the general purpose workhorses of the computer world. They handle all sorts of tasks.
Like the brains of the operation?
Yeah, you could say that. And then you have GPUs, graphics processing units. They're really good at dealing with the complex calculations needed for graphics, like, rendering those awesome visuals in video games.
Makes sense. And AI chips, those are something else entirely.
Exactly. AI chips, or to be more precise, specialized processors like Nvidia's Tensor Core GPUs, they're specifically optimized for the unique demands of artificial intelligence.
AI workloads.
Yeah, exactly. Think about the kinds of things AI is doing these days. Image recognition, natural language processing, machine learning. These tasks require a different kind of processing power than, say, rendering a high-definition video game.
So it's not just about having a super powerful chip. It's about tailoring the chip's architecture to the specific needs of AI algorithms.
You got it. NVIDIA's AI chips are designed with something called parallel processing capabilities, which are perfect for handling these massive matrix multiplications that are like the bread and butter of deep learning algorithms.
Matrix multiplications. Okay, I'm going to trust you on that one.
And they also have specialized memory architectures that let them access and manipulate data really quickly, which is super important when you're training and running these complex AI models.
So it's like they're built for speed and efficiency.
Precisely. And this specialization is a big reason why NVIDIA has been able to kind of dominate the AI chip market.
They're like the experts in AI processing.
You could say that.
That makes a lot of sense. It seems like NVIDIA is in a really good position to benefit from the continued growth of AI.
I'd say so.
But you know what I'm curious about? Competition. We talked about DeepSeek, but are there other companies out there trying to get in on this AI action?
Oh, yeah, for sure. The AI chip market is super competitive. You have giants like Intel, Google, AMD. They're all developing their own AI hardware.
Wow, so it's not just a head-to-head between NVIDIA and DeepSeek.
Not at all. There are tons of startups, too, like GraphCore, Cerebras. They're all pushing the boundaries of what's possible with AI chips.
It's like an AI arms race.
Kinda, yeah. And that's what makes it so exciting. The pace of innovation is incredible. It's really driving AI forward.
So much happening so fast.
That's hard to keep up sometimes.
So, okay, big picture time. What does all this mean for someone who's trying to decide if NVIDIA is a good investment right now?
Well, I think we've covered a lot of ground in this deep dive. We talked about those concerns surrounding export restrictions, tariffs, competition.
Right, and how those fears might be a bit exaggerated.
And we saw how NVIDIA's strong market position, their essential technology, and their history of exceeding expectations all point to a potentially bright future.
And when you factor in their dominance in the AI chip market, which is only going to get bigger, their current valuations starts to look pretty attractive.
Definitely.
But it's important to remember that this deep dive It's meant to be a starting point for your own research, not a definitive buy or sell recommendation.
Exactly. We're not giving financial advice here.
We're equipping you with knowledge and insights so you can make your own informed decisions.
And here's something to think about. Even if you decide that investing in Nvidia isn't right for you, I think this deep dive has shown just how intertwined tech and finance have become.
It's like you can't really separate them anymore.
Right, AI isn't some far-off futuristic concept anymore. It's driving innovation and economic growth right now.
And understanding the companies, the technologies, the market forces at play in this space, it's essential for everyone, not just techies and Wall Street types.
It affects all of us in some way.
So staying informed about these trends is crucial, whether you're making investment decisions, choosing a career path, or just trying to understand the world around you.
That's what the deep dive is all about.
Giving you the tools to explore these topics and have meaningful conversations. Thanks for joining us on this deep dive into NVIDIA and the world of AI chips. We'll be back soon with another exploration of a compelling topic. Until then, stay curious and keep learning.